It's about that time of day again. My name is Joseph. Wednesday evening, June the 20th. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities, setting up for tomorrow's trading session. And tonight, I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, crude oil is range bound ahead of Friday's OPEC meeting, which tells me to stay patient and fade those breakouts using the 2-try rule tomorrow morning. The S&P is bullish with a spike in range pattern this evening. That tells me to look for buying opportunities using seller failures and the 2-try rule down below the range lows tomorrow morning. Nasdaq is also bullish, but trading now back at all-time highs. It's not a great place to start buying at all-time highs, so my plan is to look for buying opportunities after a deep pullback, and I got my eyes on the battle zone tomorrow morning. Gold is bearish, but throwing us a bit of a curveball as the market looks like a strong trend lower. But upon further investigation, we have nothing more than a range. And that tells me to focus on failures. I'm going to use that seller failure pattern for buying opportunities back into the range on gold. Get a great chart to look at tonight on gold. And last but not least here tonight, the euro. The euro is bullish and headed back to the high of the range. My plan is to use a wide bull channel for seller failure patterns and buying opportunities off the lows tomorrow morning. Well, markets have been a bit sloppy here this fourth week of the month of June, but that's not going to stop us from identifying the best of the best trading opportunities for tomorrow's session. Got a great newsletter in store for you guys and gals tonight. Plenty of reliable opportunities setting up for Thursday. Before we jump in and check the news and check the charts for tomorrow, I need to remind you, if you're watching me on YouTube this evening, you can find a detailed description of this entire strategy written out in text on my blog right here at sidewaysmarkets.com. I'll put the link in the description of the YouTube video. Also, if you have any questions about anything covered in this video tonight, please remember to post those questions in the comments section below. And if you like what you see, please help support this channel by subscribing and make sure you hit the bell icon so you get notified every time I post another video. And don't forget, if you really want to stay in tune with everything we do here at School of Trade, head over here to the blog at sidewaysmarkets.com and make sure you join our mailing list. That's right, I'll put the link in the description of the YouTube video. Follow that link, join me here on the blog at Sideways Markets. In the upper left-hand corner, give me your name and your email address, and I'll send you an email every time I publish something new. Also, don't forget, lower left-hand corner, if you're on social media, you're going to love following me on social. I'm always posting videos, charts, links, quotes, all kinds of great motivating, inspiring content on my social media channels. Grab those channels in the lower left-hand corner. And how about some charts for tomorrow? How easy is this? All the charts from tonight's video, that's right, have them ready on your computer for tomorrow's trading session. Follow that link right below the video tonight on our blog. And speaking of tomorrow, how about a free pass? Would you like to learn more about my trading strategy? Want to learn all the nitty-gritty details of the strategy we use every day in our trade room? I've got a free pass. Come on, join me as a guest in the trade room. Grab that free pass in the upper right-hand corner. And if you have any questions, free pass questions, newsletter questions, trade questions, member questions, whatever the questions might be, you can always hit me up on live support. I'm always there to help you guys out 24/7, 365. All right, let's jump in here. What do we have here setting up for tomorrow's session? Tomorrow's Thursday, June the 21st. Now, we talked about this earlier on this week, right? We're now coming out of that Monday, Tuesday, Wednesday ECB summit, and that's what led to a lot of the choppy and chippiness in today's session, because it's just not very often we get 4 different central bankers everywhere, all throughout the world really, in one room. So we definitely saw a bit of a slowdown in today's session because of it, but the good news is that's behind us now. And of course, tomorrow is really kind of the first day, where we haven't been, kind of saddled down by some sort of major news. So tomorrow is kind of that parting of the sea, if you will, right? And I would imagine a lot of traders, if they're smart, especially crude oil traders, will take advantage of tomorrow's session. Now, why do I say crude traders? Because on Friday, we have an highly anticipated OPEC meeting. And of course, over the last 24 hours, we've heard everybody from Iran to the U.S. We've heard from Russia. We've heard from China. All kinds of these little tidbits coming out, right? These little press releases, little quotes, right, coming out here ahead of the OPEC meeting. They're talking about raising the production, right? The production quota, which of course everybody wants to pump more oil because they make more money. But when you pump more oil, right, there's more supply, and of course by default, right, there's less demand and price goes lower. So they're trying to balance it out right now. Big meeting. Russia may end up exiting the OPEC deal on Friday morning. So there's a lot kind of resting in the balance right now, hanging in the balance right now ahead of that OPEC meeting. So like I said earlier, I would imagine tomorrow, especially for crude oil traders, is definitely going to be a day that we don't want to let pass slip through our fingers, because we got that Friday big OPEC meeting right on Friday. And that obviously won't affect anything else, right? But definitely keeping an eye on that for Friday, right, for, of course, for crude traders. We'll talk more about that on tomorrow night's newsletter. But for tomorrow, again, kind of a wide open space tomorrow, right? No major news hanging over our heads. We got the jobless claims number and the Philly Fed survey at 8:30 Eastern time. That sounds like a great way to kickstart the session tomorrow morning. So look out for the market moving event tomorrow morning, 8:30 Eastern time, and let's get at it, right? Tomorrow being a wide open space for us to trade with. And don't forget, if you want to trade the entire strategy we're going to go over tonight, you can always join me tomorrow morning in my trade room at 8 o'clock Eastern time. All right, let's jump into our charts here tonight. We got crude, S&P, Nasdaq, gold, and we'll wrap up tonight on the euro. Now, crude is slightly bullish and all sorts of sloppy in the wake of today's weekly inventory report, and only 48 hours away from that highly anticipated OPEC meeting I talked about earlier. The key to this chart is the range. Double tops and double bottoms tell us this market is sideways and range bound. Yeah, there definitely is a slight bullish tone, so my plan for tomorrow is to look for buying opportunities down near the lows of this range with a focus on using the 2-try rule with seller failures. Now, looking at the chart right now, I think the most important kind of thing about this chart here is we go up, we go down, we make a new lower low on the day. So that's pretty much the only thing that matters on that chart as far as that low goes. And then we go up, we pull back, we go up, we come off, we go up. Yep, that's a double top. That's a double bottom. It's not perfect, as you can see, but they don't need to be perfect when we see this one come right back and do it again, right? That's the clue. That's the clue. Once we see that third top, then we know, all right, this was just noise off of that inventory report today. So up, down, up, down, up, down. Again, now triple top, at least double bottom. This is a range. And this range definitely has a bull bias to it. You know, like I said, slightly bull bias. And that tells me now I want to buy the low right below that range and go back up to the high of that range, right? That's what that chart pattern tells me. We call it a spike and range pattern. Now, at the same time, let's take a brief look at the bigger picture, because I think this is going to give us a little bit more information to use here. Here we have a strong move up, a pullback, and a new higher high. This I can connect those two highs. I can bring that down to that low, and that creates what we call a spike and channel, right? A spike into potentially here now, right, a channel. Now, I debated on this one. I thought, it could be drawn like that as well. So just be aware, it might be a little bit narrower than that. But historically, though, when we go up like that, we're going to take that lowest low right there, and that's going to be the spot we find the low of that channel. So what does that pattern tell me? Yeah, that pattern tells me look for a buy down around the low of that channel. In fact, in all reality, that pattern tells me I can look for buying opportunities literally down in this entire area, if I can get my drawing skills going here, right, all the way down there, right? So down and then right and then back up. So here we have a spike in channel that's telling me to buy nice and low, right? And we have a spike in range that's telling me to buy nice and low. So we've got some agreement here among two different chart patterns, one for today and one a little bit more of a multi-day approach. At the same time here, I can see those lower highs. I'm bringing that lower high down and creating a hidden channel, That'll be a great spot, to use as support. And we also have a measured move, one leg, two legs down, into that level of support. So as you can see, it wasn't difficult for me to identify this area down here because of the measured move, the hidden channel, the spike in channel, of course, that spike in range pattern. That's where I want to be trading here for tomorrow morning. So what's the plan then, How do we get long on this sucker? Well, usually what happens is when we see a trading range, and you'll have to kind of excuse this price action today because it was all based on that news report, The inventory report today. Like I said yesterday, the best price action on Wednesdays comes before the news comes out, because after the news comes out, all hell breaks loose. It's a gambler's market. It's just not a really reliable time to be trading, So I always skip the post-news price action. I focus on other markets, on Wednesdays after 10. So the bottom line is, whenever we see a range, though, we know we're looking for, here, this will make it easier. Whenever I see a range, let's do this, let's do this color here. Whenever I see a range, we're bullish, we go in, we pull back, we go up, we pull back, Now, of course, we know we've got double tops, we got double bottoms. Once I see that double bottom in play now I know I'm looking for, buys down below that low. And to do it, I want to see one try, two try, and then a strong move higher for a pullback going back up in. So here's what happens. What happens is the moving average comes over like that. We see the sellers try once. They try once to break out. They try to sell the pullback to the moving average. And once they fail on that second attempt, one try, two try, then I'll look for a short-term buy on the break above that high. Okay, I call that a two-try seller failure pattern, It's sellers trying to sell below the low of that range. Those poor, misguided sellers, we look for them to fail, and we buy going back into that range. Well, that's only one opportunity, Now, I don't want to chase the move going higher here, I want to buy at support. Where would support be? At the low of the range, and of course, at the moving average now, coming over. That creates the next opportunity, to be a buyer off that low. So two-try failure, two-try failure into a seller failure pattern up, strong move up, and then into a bullish pullback pattern. Now, looking back at my chart right now, again, you'll notice pretty wide range and some pretty strong moves back and forth, Now, what you want to remember is anytime we see a strong move, we want to wait for them to try again. Then I can look for that again. I can look for that failure into strength, Bullish strength into pullback, and then pullback, going back up to retest that high. Now, I'm, of course, drawing this out in a very simple way here, It will oftentimes be a little bit sloppier or even a little bit, less pronounced. For example, if we look back here, down, up, You can see how that's an example of that same pattern. It's just, again, it's a kind of a different variation to it, It's a bull market, It's a bull market. We go up, we go below the moving average, one try, two try, failure, and back up. So that's the idea, That two try, seller failure, and then buying that pullback, on the way higher here tomorrow. Now, real quick, I know we have a lot of folks here for the first time here this evening, so I want to make sure you get the most out of our nightly newsletter. In the upper right-hand corner, I'm going to drop in a link here for our free trading class. Grab that free trading class, and I want you to get a good deep dive into all the patterns, failures, strength patterns, pullback patterns, trap patterns. I want you to learn how to trade ranges, how to trade with channels, Trust me. Pause the video. I'll be here when you come back. Grab that free trading class in the upper right-hand corner, and I'll see you on a video I'm going to send you to go over all the terminology and all the details. That way, if you're here for the first time today, this stuff doesn't go way over your head, Because I realize, I am talking in a different language to new traders, and I want to make sure I give you a way to kind of catch up to speed with me, So you get the most out of my nightly newsletter. So pretty easy, One try, two try, failure, pullback, pullback, right, and then back up in. Now, can we do that at the highs? Can we do that at the highs? No. What I want to do at the highs is, rather than trying to take that failure off the high, what I'll wait for is I'll wait for the second opportunity and I'll look to sell, right, that pullback. Okay, so rather than trying to sell a failure, remember, the market is overall a little bit bullish. So instead of trying to trade that failure pattern like I would off the lows because the market's bullish, right, I'll skip the failure pattern, I'll wait for the strength going lower, and then I'll look for that sell, right, coming off the high of that trading range. Last but not least here, how do we break free of a range? Well, we're looking for the 2-try rule, 1 try, 2 try, failure. Well, what happens is if the second try is successful, now we have a bear trend. I go connect those 2 lows up to that high, and I look to sell off of that high, right? So selling off that high, again, key here is that strong move through, the pullback to the moving average, very, very important, then a strong move down from there. Now, that can happen as well to the upside, right? Strength, pullback, strength, connect these 2 highs. Once I start seeing these buyers race higher here, well, fine by me, right? We'll gladly follow that trend direction. I just got to wait to see enough proof to know I can trust, right, trading a breakout. So as we go higher there, strength, pullback, strength, get that 2-try to run outside that range, and then we'll have a lot more confidence, right, in the buying or selling of those breakouts. Let's keep going here. Over now from one range to another range. The S&P 500, the Emini, is bullish with a spike in range pattern after buyers failed to push through to new highs this afternoon. Now, knowing this, the market is bullish, so I'm looking for buying opportunities at support levels on the chart. And the most reliable buying opportunities will come using seller failures and the 2-try rule below the range lows tomorrow morning. So again, you can look at this, right? We got this spike up, this pullback. Okay, it did make a new higher high. I'm sorry, I'm looking at this mess over here, and that kind of lines up right there, and I'm going, I'm sorry, but I don't believe you. I just don't believe that's a higher high. If it is a higher high, then this could become a spike in channel pattern, right? And we're looking for this, obviously, to buy off of this low. I just don't think it is. I think we went up into a spike in range in the short term, pulled back, retested. I think we're pulling back again. So what this tells me is, we have rejection, right? We have rejection. We have the buyers who are clearly in control right now, but for whatever reason, they just don't like the idea of buying at new highs, right? This is simple supply and demand, right? Apparently there isn't enough demand, right, for prices at those highs. So where will they go looking? Well, they'll go looking at that low, right? Whenever we see a strong move up, a pullback, we expect to see a retest of the high. And then from there, right, do we see it explode to new highs? Or do we see, in this case, profit taking and likely now going back to call this a range? Okay, just like we talked about on crude oil, I'm now looking for a buying opportunity down below the low of that trading range, right? And of course, I want to use, right, the same basic strategy. Now, if I zoom out, look a little bit more of a bird's eye view here, right? Let's not forget a couple key things here. First of all, right, we're trying to go back, and the Nasdaq beat us to this, but we're trying to go back, if you recall, if I can get this thing to zoom out far enough here, right? We had this big run up. Remember this back in the beginning of the month? We went sideways. Now we're pulling back, and we're trying is the key word here, to retest, right, this 2790 area. Basically, you're trying to get back to that big round number at 2800, right? So we're trying to get back up to retest that high. As I zoom in a little bit closer here now, right, we know where we're trying to go. We can see this bull channel. Right? This channel's been slightly updated here for today's newsletter, but as I mentioned in last night's newsletter, right, we were looking to buy the low of that channel, right? So that was a great opportunity today to really make some profit, right, out of a pretty sloppy market, right? If you recall, the S&P sat here for quite a while this morning, right, while all the central bankers of the world, right, were chatting about how to save the world, right? And of course, the pullback happened right down to the low of that channel. So bottom line is, if you were watching last night's newsletter, you were locked and loaded for today's price action. Now, as we open up in Asia, I have a spike into a range. You know the plan, right? We're looking for that one try, that two try. Moving average will come over. Failure, strength, and pullback, right? And pull back up, right, to retest that high. Looking for that seller failure pattern after the one try, two try rule. Seller failure into bullish strength, right, into a bull pullback. And again, if you want to learn more about all of these patterns, right, make sure you grab that free trading course in the upper right-hand corner. Now, as we go higher here, right, what do we need as we go higher? Well, again, one try, two try, well, you can see it right here, right? One try, two try, failure, strength, pullback. That's exactly what I just described, right? One try, two try, failure, strength, pullback, right? It happens over and over again. So we go up, right? Remember, the market's bullish now, right? So I'm not just going to take the failure, right? It's one try, two try, failure, strength, pullback, and I'm looking for that one right there, right? So instead of taking the failure pattern off the high, again, the momentum is in the direction of the sellers, right? Momentum is going higher right now. And so because of that, I want to skip that first one and focus on the pullback, right, as we go lower. And remember, when it comes to a trading range, you want to avoid that middle, right? Stay away from that middle. Buy low, sell high. And of course, again, focus on those failures, right? So one try, two try, failure back in. One try, two try, no failure, but pullback, right? Focusing on selling up around those highs, right? Because you can't really trust it going against that momentum. Now, how do we make a run for this sucker, right? How do we make a run for this? One try, two try, explosive second try. See, look at this. They had a chance here, right? They had a chance. Strong move up, pull back, nothing, right? Look, no explosiveness there. That's what you want to see. You want to see up, pull back, go, right? Be very careful trying to predict this move, right? It's very, very difficult, as we saw earlier on in today's session. What do we do then? We mark up those new highs. We find that new trend line support, and we're looking to be a buyer, right, off of that new, what I call a hidden channel or a spike in channel pattern. Where's our target? Yeah, target is, you got it, back up to that 2790 area, 2791 area. And if we can get back up there, we're going to be back into that original trading range. If we do end up back here, we'll then look for those buying opportunities off the low of that range tomorrow. Same thing goes for the sell side. Strong move down, hold the pullback and run, new channel, right? We'll look to sell, right, as the market goes lower, right? Bears want to get back down. Boy, bears have a lot of window here to work with down to that 2735. Buyers, again, trying to get back up to that 2791 area. Stay away from that middle. Buy low, sell high. Remember, focus on those failures above and below that trading range. Now, like I said earlier, the Nasdaq beat us to it. Nasdaq is bullish and trading at fresh all-time highs this evening, and the price action of the highs tells me that buyers are a bit weary of committing more capital until they see additional proof. The market is definitely bullish, and seeing profit taking at the highs, my plan is to look for more reliable buying opportunities down at support levels using a seller failure pattern tomorrow, while waiting for proof of a successful breakout pullback to new highs tomorrow morning. So looking at the Nasdaq here tonight, if I zoom out here a little bit, you can see why I say, right, the Nasdaq kind of beat us to it, right? Here's that. Well, to be very honest, right, if you want to go further out here, you can see, right, we've even more of a strong move up, right? Strong move up, pull back, retest the high. But again, focusing on the short term here right now. There you go. Maybe the medium term, right? We have a strong move up, right? We saw that deep pullback. A lot of it was caused, right, by the tariffs, right, between the U.S. and China. A lot of that move lower was really just a knee-jerk reaction on Sunday evening. And of course, now here we are, right, finishing up the week now, back up, right, to retest that high. So deep pullback, back up to retest that high. So here we are, right? We're back up at all-time highs. And this goes right into what we talked about earlier this week, right? I'm not sure if you guys were here for this one, but we talked about this, right? Anytime we see a strong move in one direction, what do? We expect to see at least a two-legged pullback and a retest of the high, right? Once we get back to retest that high, then we take a timeout and we wait for one of two scenarios. Either we explode, that's the key word, explode on strength through the high. I call this acceptance, right? We're accepting the idea of price exploration. We're accepting, right, higher prices. There could be some major news that just hit, right? Maybe Apple, this is Nasdaq, right? So maybe Amazon just reported earnings, whatever the case may be, right? We see acceptance. And if we see acceptance, we then start looking at this now as a new channel, right? And we end up looking for that pullback and buying off that, right, off that new channel. If we don't see acceptance, if we see rejection, right, which we've talked about a few times already, if we see rejection off the high, well, then what? Well, then we look back left, right? We find the deepest part of that pullback, and now this becomes a trading range, right? And of course, a trading range, what do? Yeah, we look to buy the low, right? One try, two try, failure. You get it, right? We just talked about this quite a bit already. Okay, so here we are now, right? We go up. We pull back again, tariff talk. I know a lot of that was overdone, right? But now here we are back to retest that high. So now as we go back to retest the high, what are we seeing? Are we seeing a feverish buying frenzy at these highs, right? Are we seeing buyers who can't get enough of this? No, we're not. We're seeing, well, profit taking, it looks like. Yeah, it hasn't been ridiculous profit taking by any means, but you can definitely see, though, we're not seeing that, going out of business, type of scramble and get whatever you can before it's all gone, type of excitement at those highs. We're also not seeing, which is interesting, we're also not seeing basically a short covering rally. You would have expected there would be some stops up here, right, that are getting run, which is very interesting. Right? It's interesting to see that even though he poked the highs, it doesn't look like there are a lot of stops getting run. Usually when you see a big collapse off the high like that, people get short, thinking we're done. They read the newspaper. The newspaper, of course, is always bad news, and they go, "Boy, I'm going to sell this thing before I can't get my my money out of this market." And of course, when it comes back to get them, right? When it comes back to retest their entry price, what do? They get out. Right? And so, of course, when they get out, usually leads to a short covering rally. We're not seeing that right now. So there's definitely a very strong bullish tone to this market, right? Buyers are not exiting their positions, right? Because we're not seeing a deep pullback, right? How would you know if buyers were exiting? Because you would see a big pullback, right? So buyers are not exiting their positions, but at the same time, those sellers are not taking the opposite side either. So we definitely can see here buyers are fat and happy right now, and you can tell, right? They're probably going to see any buying opportunity, any pullback will probably be seen as a buying opportunity, right? The bulls are buying, and the bears are buyers too, right? Because you can just definitely tell the way this thing sets up. So now here we are, right? I need to see more proof. If we pull back, I'm looking for this to be a trading range, basically, right? If we pull back, I'm looking for a trading range, right? Off of that low, right? If we double top here and then pull back, this becomes a trading range. Okay, so we got some options here right now. Okay, if we go higher here now, I've got to be thinking that measured move is the next objective, at least for now. Okay, who knows what the rest of the people bring, but I don't think that's going to be our objective here. So if we do go higher, I want to see a nice strong move up so I can have confidence to be a buyer, right, as we go up to that measured move. Okay, so we got a bunch to wait for right now. Today is really a waiting game. It's really a waiting game right now on the Nasdaq. I don't want to trade here. I want to trade either down here or I want to see it go up so I can then buy a pullback and buy it nice and low, right? That's basically my two goals here for tomorrow. Now, of course, I've got my eyes obviously here now on this being the potential trading range, right? It would be something like that most likely, or might be a little bit lower, something like that, right? That'll be our range high. Okay, so we pull back. I'd love to see us go down if we pull back, right, as we zoom in further here now on this chart, right? I have my highs here connected. Bring it down to that low, right? That's going to be a level of support. I have this low here. Obviously, that's a level of support, right? And if I can get a strong move through, right, I can use that as a level of support as well. All right, so I want to buy at support, right? Bullish market, buy at support. So how do we do that? Well, one option would be let's sort of find some support level, right, off of that low of that channel, right? So as we go lower, moving average comes over here now. We look for that seller failure. That seller failure is my first buying opportunity into my moving average pullback, a little bit smaller there, right? And then we're looking for that buy going back up from there, right? You can see a good example of it right here, right? We go down, seller failure, right, into pullback, and then back up from there, right? So down, failure, strength, pullback, right, and then pullback, goes back up from there. Now, with that, right, with that trade, you've really got to make sure you're being careful not to buy, right, as it goes up here, right? It's easy to let that pullback pattern, it's easy to let that one kind of slip through your fingers, so make sure you really be disciplined not to buy too high right now. And obviously, if that's what we get tomorrow, it's probably going to be a pretty easy job up to that measured move. Now, I'd love to get it to pull back a little bit further here. Now, if it pulls back further, right, that's what we have to be watching for, that prior swing, right? So down, get that moving average up. Bears now will try to reverse that trend. If they do hold it, right, they can take control of that market. But we're expecting this to fail. That failure, of course, off of that low into strength to the pullback, right? And then, of course, a pullback going back up to retest that high, right? If we pull back that far off the highs, then our objective is back to that 73.30 area, and then we'll have to wait for proof and see if we can get through the high of that trading range. Okay, so that's if the price pulls back here. Now, what if price goes higher here? A couple scenarios, right? A couple scenarios here. First would be we go up and we bounce off that high, right? If that happens, then we have a bullish move with a double top. If that happens, now we find our range, right? And what do? Yep, we look to buy below low of that range. This will obviously happen, later in the session tomorrow, right? One try, two try rule, failure, strength, pull back, right, and back up from there. So we're watching for a potential one try, two try, right, into a failure, right, pull back, and then back up we go from there. Make sense, right? So if we do see double tops here, look for that short-term trading range. Again, right now it's kind of a waiting game. We're waiting to see what we get, and then we can play it from there. The hard part is likely going to be if this thing was to sprint higher. Now, again, it goes up, it pulls back, it's a range, right? Buy the low of that range. Okay, but if it just runs higher here now, what I want to see this moving average come up, and I want to buy that pullback using that high, right, as my level of support, right? That would be the goal. Okay, and the key is to get it on the way up to that measured move. Now, things might get a little bit ugly tomorrow, right? For example, let's say like for the S&P today, right? We sprint up, but we end up going sideways here. That's what happens on the S&P, right? We kind of sprinted higher, and then we started going sideways above the highs. Well, when that happens, right, look for it, pull back, one try, two try, and buy low, right? So if we end up seeing this sucker, right, if this thing just sits up here for a while, right, don't chase after it, don't force it, don't sell, that's for sure. Wait to buy it, one try, two try, failure, right, back up. Just like we saw today on the S&P. All right, guys? So last but not least, how do we reverse? Is it possible for reversal? Oh, absolutely, right? We're at the all-time highs. Who knows, right? Apple comes out and says, we messed up. We made the iPhone 4 instead of the iPhone 12, and we got to, who knows, right? Worse things have happened. So let's say we do get a knee-jerk reaction down. One try, two try, right? Strength, right? Strength. We see a strong move down, right? They hold the pullback. Remember, if they can't hold that pullback, we're going right back up to retest that high again, right? So they got to hold the pullback. They hold the pullback, we run lower. Okay, what happens now? We run, and what? We look to sell up off that high from there. Okay, so again, strength, pullback, strength. 2-try is successful now at reversing this trend, and we'll sell at resistance. That's our plan for that Nasdaq tomorrow. Pretty easy. We're just going to wait and see what we get. Now, over to a bit of a curveball here tonight. Gold is bearish. Yeah, obviously bearish. And at first glance, it appears we're trading at the low of a beautiful wide bear channel. But further investigation shows both double tops at the highs and double bottoms on the lows. What's that? That's a trading range. Knowing that this is a range, we're now trading below the range lows on a strong move from the bears. So my plan now is to look for buying opportunities, but only after I see the sellers try to hold the pullback and fail at the moving average tomorrow morning. Now, as I zoom out on this chart right now, you can see where we're coming from, right? We had that trading range, that triangle, and we basically just rocketed lower here, right? And we've gone into another trading range. Okay, what you need to be aware of is that vertex of the triangle, right? I mean, in all reality, you could go out and say, you know what? This is the battle zone we care about now, right? Because the vertex of that triangle, right? That is also a level of resistance, right? So keep that in mind here as we go into the rest of this week. Now, gold has been very much subdued by this ECB meeting this week, and hopefully, like I said earlier, hopefully tomorrow will be that day where everything breaks loose, right, of this chatter back and forth, and we get some good session right out of gold tomorrow. Most important thing though is that at first glance, this thing looks like a spiking channel, right? Doesn't it? It just at first glance, if I was to delete everything off this chart, the first thing you would think right now is, oh, it's a channel, right? But if you look closely though, what happens? And this is where I like to draw on my chart and talk this out loud. You know, studies have shown now when you say it out loud, I know it seems foolish because I'm the only person in my office right now between you, me, and the rest of the YouTube world out there. You know, I know it seems a little bit foolish sometimes, right, to say things out loud, but just talk yourself through it, right? We go down, we go up, we go down, we go up, we go down, right? Now, what do you see there? I see that is a double bottom. Now, whenever I see a double bottom in a bear market, what does that tell us, guys? Trading range, right? Find that range. Does that make sense, right? Anytime we see a strong move down, we expect a retest of that low, right? If they bounce off of that low, what do we call it? We call it rejection. We mark up that low, we look at the pullback between those two lows, and that becomes the range. Then what do? We look to sell it, right? 1 try, 2 try, failure, strength, pullback, right? Back down to retest that low, right? We look to sell that market. Okay, so knowing that, same thing happens, right, on the gold here, right? We see the 1 try, we see the twice, right? We bounce back up, we fail, strength, pullback, and back down to retest that low. So right now we have that bear market into a trading range. Now, where are we? We're at the low of that range. Now, what don't we do in a range? We don't trade breakouts. Why? Because in liquid markets, like all of these markets we're analyzing tonight, most breakouts are going to fail. Now, I realize that in the old school stock trading books, penny stocks, cryptocurrencies, these are illiquid markets, right? Yeah, breakouts will work because there's an inefficiency, right, in getting orders filled. But when it comes to liquid markets, it's very rare that breakouts are successful on the first attempt. So as we go lower here now, you know what I'm looking for, right? I want to go back into this range, right? Whenever I see a trading range, it's buy low, it's avoid the middle, right? And it's, you guessed it, right? It's sell high. Okay, so we have a good plan here for this. Let's not let this strong move down intimidate us or fool us, right, into thinking this is, right, a trend. Well, it's a bear trend, but it's trading at the low of a range. So what do we do here? 1 try, 2 try, failure, strength, pullback, back up. Now, like I mentioned earlier, we have a bearish trend. And with that, I'm always hesitant to take that failure. So rather than trying to take the failure, what I'm going to do is wait for that pullback right? And buy that pullback, right? Makes sense? Does that make sense, guys? Right? Buy that pullback as it's now running back into that range. Because sometimes what happens is it'll go one try, two try, failure, but you'll have a bunch of sellers hanging out up here, and they'll just sell it again, right? And then you're gonna wait and do it again. So again, going against the overall momentum, right? Momentum is going lower. So in this case, it's one try, pull back to that moving average, right? Two tries. I'm going to wait for that failure, look for that strength. That will bring the moving average up. I'll try to combine the low of that range with the moving average and look to buy, right? Look to buy off of that low as we go back up to retest the high. Once we go back, sorry about that. Once we go back to the retest the high, one try, two try, failure, strength, pull back, right? And pull back down again, right? One try, two try, failure, strength, pull back down. One try, two try, failure, strength, pull back, right, and back down to retest that low. Don't forget, if you want to learn more, you want to get the deep dive, you want the entire skinny, right, on all these entry patterns, grab that free trading course in the upper right-hand corner, and I'll show you a lot more that I can cover on this, right, on this short, almost an hour-long nightly newsletter I publish every evening. So that's the plan there on the gold. Now, what if price keeps going lower here, right? It definitely could, right? One try, two try, failure down. Well, if we see the market keep going lower now, we know they're trying to hit that big measured move, okay? And this is an example where you're just going to wait it out. You're going to wait and see what they do here because you can't trust trading short here. If they do go lower, we find that new channel to sell right off that hidden channel, okay? So it's relatively easy. You're just going to wait and see proof. Right? But if we don't get proof of new lower lows here, you got it. We're going back up, right, into that range. One try, two try, failure, strength, pull back down again, right? Relatively easy there. Relatively easy there on the gold. Just got to wait and see what we get here tomorrow. And then how about some euro? Boy, euro is bullish and still trying to complete this move back to the high of the weekly trading range. But it's obvious. At this point, buyers are worried about buying too high. You can see every time they go back into that middle, they keep getting rejected. So my plan, right, my plan for tomorrow is to focus on buying, but just like we're seeing right now, right, buyers are only capable or only excited about buying deep pullbacks, right? So my focus tomorrow will be buying those deep pullbacks, preferably down at the low of this bull channel using the two try rule with a seller failure pattern, right, tomorrow morning. Now, of course, on the euro, right, I'll remind you we are below the low of that trading range, right? We've seen a lot of different two try opportunities. One try, two try, failure, strength, pullback. One try, two try, failure, strength, pullback, right? I mean, we've seen quite a few of them so far. And you'll notice the buyers are just eating it up every time price moves lower. I'm marking up these highs, I'm bringing it down to that low, and I'm looking to buy off of those lows. Looking to go lower. One try, two try. You get the point now, right? Same basic strategy, except we use it slightly different now, going up off that low, right? The market has a bullish tone to it, although we're range bound, right? We're trying to rotate back to the high of that range. We're trying to go back to the high of that range right now and potentially all the way up to that pendulum swing, which is all the way up at that 17,311 area, right? We saw that move down. The move down will likely be the move back up eventually here. And the euro, much like the gold, has been a little bit subdued because of this ECB meeting we've had this week. So I like my channel. I want to buy off the low of that channel, right? I like these prior swings because as you can see here, euro really wants to buy low. So let's go down, get that moving average over. One try, two try, failure, strength, pullback. Now in this example, I can take that failure pattern because we're going with the momentum of the market, right? Very different than taking a failure pattern going against the momentum, right, of that chart. All right, guys? And then don't forget, if we get back to the highs here, be very careful. One try, two try, failure, strength, back down in, buy low, sell high, focus on failures, and use those two try rules. Again, stay away from that middle, right? You can easily see they keep getting rejected here, every time we go back into that 16,700 area. So stay away from the middle. If we go in, wait to buy the pullback, wait to buy as low as possible right now. And again, to learn more about all the entry patterns I'll use during ranges, make sure you grab that free course in the upper right-hand corner, or come out and join me tomorrow morning as a new member in the trade room, and we'll execute this strategy together according to our rules. Guys, wrapping things up here tonight, I know you have a lot of choices with how you spend your time on the interwebs these days, so thank you so much for stopping by my newsletter. Thank you for commenting. Give me a thumbs up if you enjoyed the video. Thank you for subscribing to our channel, right? And thank you for sharing these videos with your other trading friends. Don't forget, you can always call me anytime you want. I got a toll-free number for our corporate headquarters here in Los Angeles. You can always take my free trial to get a free pass. Come join me in the trade room as a guest. And don't forget, I've got beginner, intermediate, and advanced classes. You can learn more about those on our website, or simply call me in the office or use live support to answer all your questions. Guys, been a great week here so far. Excited for another big day of learning and earning opportunities. Hope you guys can make it tomorrow morning in my trade room at 8 o'clock Eastern time. If not, we'll do it all again tomorrow night, same time, same place, on the next edition of our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos.